Good morning, everyone. Welcome to today's ad-free live stream. Super pumped that you're here. I don't have the key. I don't know where it's at, and I just started the live stream. You tell Mom to use her phone. How's everybody doing this morning? If you're here for the first time, my name is Tyler. I'm going to be helping navigate you through the wild world of day trading futures. And today is no exception. Today is the day of liberation. The day of liberation, according to Donald J. Trump. President Trump. It's the day of liberation. It's the day that all the tariffs go into effect. The reciprocal tariffs. So it'll be a very interesting day. Do we see the market just sell off? Do we see the market continue to follow its patterns that we normally see? We will find out today. Today we are going to find out. If you're watching this after the fact, you can jump to the key markers using the timeline and the chapter markers below the video. Lastly, if you're looking to take your trading to the next level using funded firms, you can use the code DTJ to get the most updated discount Apex is offering. And that code is there on the screen, DTJ. And actually, I don't think they're doing 80% off. If somebody knows exactly what their discount is, let me know and I'll update that right now. I don't think they're doing 80% off. Let's find out because I want to make sure I'm accurate in my assessments. Either way, I'm watching the opening range gap sitting right here. This opening range gap, that's from March 31st. I want to see how that responds. If we're going to run and fill it up, or if we are going to run through it. Now, because we hit a weekly low, this weekly low that we hit way down here, to me, it's a big level. So I'm potentially looking at price doing this. I want to see higher prices. So right now it looks as if we are at a 70% discount. So they are doing a 71% off. Yeah, they're doing 71% off. 71% discount currently right now, and you can get that information, or you can use that information. There you go. All right, so now that I got all of that stuff out of the way, we tagged Friday's EQ on open, like you mentioned. Yes, I was going to bring that up. It did not do it on Tuesday. It did it on Wednesday. But it did it within like the first 15 minutes of opening. And then once we hit that level, it just like slides lower. So that's where my question is going to lie, is when you look left, when we look left in this price action right here, what is the most obvious area of support? Or another way you could say it is, where's the unmitigated area of support? And currently, the only unmitigated area of support on the hourly is this hourly fair value gap that's right above the 930 price. It's the only area of price that hasn't been mitigated yet on the hourly time frame. So that's a BISI. So we're going to mark that out. Dropping down to the 30-minute, everything here has been mitigated. Dropping down to the 15-minute, even on the 15-minute, we got nothing lower. This has been mitigated on the 15-minute. This is the current 15-minute fair value gap that is holding price up. So I want to mark that as well. because it has already shown price finding support there. So we have that. So we have this 15-minute, excuse me. We have this 15-minute, we have this hourly. And that hourly is at the low of the opening range gap from March 31st. So I'm interested in seeing if we want to fill the remaining portion of this right here. This is unfilled opening range gap that has not been tagged yet, and I would be looking at this 930 price to find support. We also have a breaker right here that's overlapping, a breaker block. I mean, it's a large one, but that's technically a breaker block. I don't think I even put that on there, so we're gonna just delete that for right now. And that's kind of where things are sitting right now. As far as our current day levels that we need to mark out, I have our new day opening gap. We've respected that. I was watching the 4-hour reversal, and we never hit this 15-minute fair value gap. Instead, we just slipped lower and lower, and we filled this 15-minute fair value gap, and then we filled that 15-minute fair value gap and then sold off lower and lower. Good morning, Ted, Brady. Now what? Good morning. Asia session created a nice 15-minute breaker, which executed during London through the PM. Yeah, we got right. The Asia session created right here. I'll look at the lower time frame here in a second. But we got our midnight open. We have our London high. London high is sitting right here. We have a 15-minute fair value gap. We have our previous day high we already ran. I'm going to say the likelihood of us getting down to the previous day low, while it looks good right now, and it's possible, the odds of hitting the high and the low are 11%. Statistically, us running the previous day high and low is 11%. So I'm going to really watch this new day opening gap or new week opening gap and this 15-minute fair value gap and see how we react. If we do, in fact, run the previous day low, I'll use that as a key liquidity point to see if we want to do a retracement, a reversal, or if we're going to continue to sell off lower and lower. And quite frankly, with it being a new day, new tariffs are going into effect, I'm not sure what's going to happen or how the market wants to react to this news. The current news we got today, pulling up the calendar, today is Wednesday morning. Trump speaks at 3 p.m. He's going to be talking about tariffs today. So that's at 4 p.m. That's after the market closes. That's when the market closes. So pretty much nothing today. We need to be careful. I'm going to be sizing down. I'll probably be doing 1 or 2 micros for today's trading session, just with a little bit of the uncertainty. I don't know what to expect. We'll see what the market wants to do. Last thing that we need to throw on the charts before the opening price is our opening range gap, which is right here. And we have a large one, 609 to 332 so far. That's 300 points. Again, when we have large opening range gaps, we don't see them get filled. Take a look at March 31st, right? Here's March 31st. Where was it? Opening price. Oh, wait, did we fill that? I think I have a wrong assessment on this. No, we filled this sucker. I don't know why I have that on here. Let's delete that. That's confusing me. Because we did fill that. So there's a chance that we may only fill a portion of this opening range gap and not the entirety of it. If you're going to take a trade through this, you got to take profit at the opening range gap or the midpoint, the consequent encroachment of that level to protect yourself. But we do have the potential of a 930 model to the upside. Let's take a look and see what that looks like. We've been selling, selling, selling. We got a 1 minute fair value gap overlapping with this. I'm going to mark this out because it's inside that 15 minute fair value gap. And I think I just want to know where that's at. Yeah, opening range gap is quite large. I don't have any clear breakers in this price action right here. That's clear for me. We've already hit a couple breakers there and there. So I'm not interested in that. We look at the 2 minute. Five minute created this order block right here. We now have a 5 minute order block and we have a continuation confirmation. Those are all reasons why I'm considering not taking the 930 model. Only way I would do that is if we wick lower and start coming back the other direction. Let's see here. Got my 930. Honestly, I think we sell off more. It's just, I think I could take it off of that. I think I will take this right here.
Order submitted.
There it goes.
Order submitted.
I unfortunately pushed the wrong button. So it was a winner, but it was a loss for me. I pushed sell instead of buy. Glad I sized down. All right, as far as what we got here, I need to wait until we get inside this fair value gap to look for any longs. We're too low for any sell-offs because we got liquidity points in here. Let's go ahead and mark our 930 price. Nice expansion candle. We're waiting to see if we get some type of fair value gap. It doesn't matter how big this candle is. I don't care. It matters if we leave fair value gaps behind. Until then, we could just do something back and forth. So right now, we're inside the new week opening gap. We just need to sit and be patient here. What's up, Stan? How you doing? Good morning, good morning. Jay Hong, how you doing? All right, so as far as we got the beginnings of a potential 30-minute reversal right here. We swept lower. Then we swept this candle. We got to wait 30 minutes for this one to take place. So we have a little bit of time to see if structure wants to form and us start rebalancing some of all this price action that we have right here. It's hard for me to just want to jump in and participate in this. I'm watching this 5-minute. This 5-minute is sitting right above this swing high right here. There's a swing high right there. So I want to see a retracement back into the first fair value gap and see if I can jump in, participate in this. But it's just pumping without us right now. We let it go. We let it go. I mean, you could probably chase this a little bit towards the previous day's equilibrium. It's a good chance we're probably just going to push up into that. There it is. I feel like I'm going to gamble. Everything in me wants to do it, and that's when I know I need to say no. So no trade except for the 9:30 this morning, and we're going to sit and wait. All right, next thing we got is the equilibrium or the midpoint of the opening range gap. I don't know what this candle is here. What is that candle? Why is 602 so large? I would agree. It's like, go, get in long. Look at this. I mean, how you're missing all of this. I mean, it's not bad to take the trade. I mean, you could take the trade and you could. We got 1, 2, 3, 4 fair value gaps in a row. We got a swing high right there. Let's watch that swing high. I wouldn't blame you. I did. I will. I'll say a not gonna lie, Ted. I'll say a not gonna lie. I took a short right at that swing high right there, and I got 10 handles. That's what I did. I didn't chase this. I waited for this, and I took a short, just for 10 handles. I'll show you. I'll show you. I'll prove it. There it is. I took it right there. Just 10 handles. 512 to 502. Just a little. I don't have it on me. It's in somewhere. I can't. I'm not going to look right now.
I need to go downtown.
Okay, you have your phone. Does it not work? Give me a second, folks. I'll be right back. Sorry about that. My wife needed my key to my car. I'm just reminding myself. Yes, this was 170 points in 5 minutes. Woo! I wish I could have had that. But my goal is to get 40 to 50 points, okay? Goal to get 40 to 50 points. I know there's going to be another setup that's going to give me 40 to 50 points. I mean, we already talked. I'm honestly surprised we didn't get into this fair value gap down here. Really am surprised. That's very shocking to me. I mean, I get it that we filled this new day opening gap. So, I mean, it's not extremely shocking because we had a reason to turn around. But, I mean, it's right there. It's boom. I mean, it's within a couple handles. So, a little surprising there. Are we going to just run up to this high? This London high? I mean, at this point, London high is my target. I did mention that we're probably not going to, there's 11% chance that we run the London low. So London low may still be there, or excuse me, the previous day low. We'll see if it wants to do anything, but as of right now, the bodies are respecting that small swing high sitting right here at 618. It's also a 1 minute fair value gap on this giant candle at 602. We'll see what happens, but nothing to take here. We don't have enough structure to know what we're going to do at this point. Or at least I don't. Maybe you do. Maybe you do. If you guys are appreciating the commentary, do me a solid, hit the like button. I used to say, hey, we got to get 15 likes here before I do a trade on screen. Let's hit 15 likes and then I'll do the next trade on screen. I know I took this little trade right here off screen. But we'll get one. We'll get one. All right, so what's important right now in this huge price action is how do we react to this first fair value gap? Do we just run right through it or do we find support in it? Okay, that's what we want to find out. Here's the first fair value gap from this, or I should say the last fair value gap created before the swing high was formed. So let's see how the bodies react to that fair value gap. Oh, man, and we're there. 16 just like that. Okay, folks. You performed, I'll perform. Good morning, Nick. How you doing? All right, so we're going to get rid of... It's a good habit to get rid of fair value gaps that seem insignificant, okay? It's a good habit because it keeps your chart clean. So I initially liked this 5 minute fair value gap, but we stopped in it and then ran right through it after that. So to me, this is irrelevant. Why? We also have a second 5 minute fair value gap right here that it ran through as well. So to me, this is irrelevant. So nothing to see here, so to speak. We do have a breaker that's sitting right here, right at this first fair value gap. So I'm looking at price to come all the way back down here and then maybe do one of these, or maybe come back down here and do one of these. That's kind of what I'm looking for at this point. It could just say, you know what, Tyler, I'm not going to do what you want, and I'm going to run for this London high right now. And it could. It most certainly could do that, and we will watch it with pleasure. Can I mark the breaker, JB? Sure. So, low, high, lower low. The breaker is the series, the breaker block is the series of up-close candles for a bullish breaker. And for a bearish breaker, it's a series of down-close candles for the bearish breaker. So in this case, here's a high, low, higher high. This is your bearish breaker. And if you look at the price action, how it went lower once it came up into that zone. Yeah, it stayed in here for a long while. I would never trade stuff like that, but that's what a breaker block does. That's the characteristics of a breaker block. So at this point, we're still just pumping. On the line placement, two options for the line placement. You can either do the high of the consecutive up closed candles. So here's your high. Or you can do the body, the high of the last body. Now, if I'm picking one, I'm picking the one that overlaps with something else. So in this case, you have a 5-minute fair value gap sitting right here. Look where that 5-minute fair value gap overlaps with. Okay, there's the middle. It overlaps with the first fair value gap. So if I had to pick one, me personally, I would pick the body of this instead of the wick, because I like the idea of it coming into this first fair value gap. I like it coming down to the middle of the BISI, of the 5-minute BISI, right? I want to see it find support around this area here. So that's kind of where I would mark that if I had to pick one based on what I'm looking at here. Now, this may be an irrelevant breaker. Maybe it comes back in the future. We'll see, right? We just tagged midnight open, and we are still just grinding higher. Stop to tick below. Why does mine show that it says it goes up? It's up. Oh, maybe you just marked it. You saw it do that before and then it passed it. All right, so what am I watching now? Midnight open is a key level. Could we run up to London high? Yes. But until then, if price is going to be this aggressive, I do want to mark out and make sure I know where this 1-minute inversion is. It's the single fair value gap, or the lowest fair value gap in this price leg that made the highs that ran this level there. So I just want to mark it and know what's here, in case it wants to be aggressive and run lower. I can take an entry on the close below that of that inversion. News at 10 and market maker sell model. I'll play it. I don't know if it completes. I don't know. I mean, the likelihood of us running to the previous day low, remember, is 11%. The likelihood of us tapping back down here, I don't think that's unreasonable. But man, it certainly looks like it's just pumping. I mean, we got to get a retracement. So, I mean, I'll play a 20-30 handle retracement to the downside. It just needs to hit a key level, which we have in the form of the midnight open. But remember, we also have London high here and the new day opening gap sitting above that. So do I want to go short right now? If I had an inversion, the only way I'm taking a short trade is I'm going to, so one of my goals, I'm going to be coming out with a video probably tomorrow on using, and I mentioned this in the stream, using AI for your journaling and for using AI as the benefit of a mentor. And I'm loving it. I'm loving it. I journal everything that I want. I write it up, and then I ask for recommendations based on what I've given ChatGPT for what I'm looking for. And it gives me their recommendations on what my focus needs to be. Well, this week my focus is taking out, is taking mechanical take profits. So I have one take profit at 20 handles. That's a guarantee. Then I have another take profit at 40 handles. That's a guarantee. In a scenario like this where we have potential targets to the upside, I'm not going to hold for the bigger move. I'm going to run for 20 handles and I'm going to take everything off. Because in my mind, I'm thinking, hey, we could, in fact, run this level here and run for this sell side, this minor sell side, right? We could do that. If we do that, could we just reverse right here and run higher? Absolutely. So with me knowing that I have some potential key levels above, I want to not hold for the bigger move. And it's outlined on my focus for this week that if we have a higher time frame key level grabbed, then hold a runner. Hold a runner for your key levels. If a higher time frame isn't grabbed, don't hold your runner if you're gonna go against the trend, and take full profit at 20, 25 handles, whatever your target is, because the likelihood of it just being a fake out and then continuing higher is a higher probability, simply because these are key levels. These are significant levels. Now, if we get this level and then I get our model and we get our setup, well, I can take one and I could hold the other for a bigger move because we had a sweep of liquidity and we have a clear target down here that we could potentially run for. That's kind of my thought processes right now on how I'm going to handle trades. Because, I mean, you can see that it's not running lower. We have these levels here, but if we do run it, I will probably end up taking it because we at least hit midnight open. And I'll take it to this low right here. Right? This is a minor sell side liquidity. Yeah, now that you brought that up, Bannock, I was like, I'm pretty sure there was no news. I guess you could call Trump speaking news, because every time he says something, the market goes crazy. I'm saying that a little tongue-in-cheek, because everything is rigged here. We got 6 minutes till the market open, or market till 10 a.m., I should say. It's tariff day. Yeah, that's what I was saying, Nick. Today, there's a lot of... You know what? And it wouldn't surprise me if we just shoot through the moon, because, everybody thinks it's going to sell off. So what does the market do? Well, we're going to get all your money and go long. And then once everybody's like, oh, crap, I guess we're going long, then they're going to go short. Raise the king. Market's been slow when Trump speaks? Okay. I really don't know. I'm paying attention. Yeah, I don't pay too much attention. I kind of just use it as a talking point. Bullish breaker? Yeah, I see the bullish breaker. I mean, I'm not gonna take that personally. Considering midnight open was right here, you could take. You do have a small inversion to the upside right here. You could play off of if you wanted, but I don't like those ideas either. I would rather wait for it to hit these levels personally for me, and then take a trade. Oh, you're talking about the bearish one? Yeah, you're looking at that one right there. if I'm going to take that, I probably, for me personally, I would wait for this bearish to hit, and then I wouldn't take it until we close below the inversion. I would want to see the breaker work and then use the inversion for confirmation to run lower, because I have a higher time frame target to the upside potentially. I just don't want to get caught up in that. I do like this 15-minute fair value gap to the upside as well. Right there. Trying to decide if I want to take this inversion. We swept liquidity. This looks good. This is everything that I'd want, except that we have already tagged a level of a key level to a degree. Yes, these are still above here. So let's see how price plays out in 30 seconds. And it may be an opportunity. I'm not opposed to it. It doesn't look horrible. And the risk is relatively small. I mean, 7 handles for a stop loss. So it's actually, the risk is pretty low for what our reward would be. So I think if it closes above, I might be, I think it's a risk worth taking. I don't like how we didn't tag this fair value gap here. Getting the tag and then closing above would be even more, it would be even nicer. May blow my first challenge ever. I'm risking $350 per trade on a 50K eval account. Only 2 trades per day. 2 trades per day is a good risk management. I would probably say I would drop down to 5 micros and drop your risk to 150. Okay, there's our tag. This is not a bad. If this just keeps pumping, I'll have to jump. I will probably jump in this early. I'm going to take a stab and see what happens right at 10 o'clock here. Nope. I was denied with my 20 handle stop loss. So we'll wait and see if it closes. I'm pretty sure this is going to go. Yeah, All right, gonna take one TP there. Moving my stop to break even. And I'm gonna see if this wants to push higher up into this 15-minute fair value gap, which is sitting at 1612 or 612. So I'm gonna put my target there at 19,615. It'll reach for it here. We just filled the opening range gap completely. Come on, give me just a pop right there. I'm going to take it because the opening range gap was filled. So I just don't want it to sell off right here. All right, so I am out. That was, man, that first entry, if we just didn't get that retracement and didn't lose that 20 handles, that would have been way nicer. Still recovered that and am green on that trade right there. All right, so we're inside this 15-minute fair value gap. This is where I think we find some consolidation here. And we have our previous day high that we could probably tag. But do you see the rejection in just that candle once we hit the 15-minute fair value gap? I mean, that's a big level. So honestly, if we continue to see aggressive price action, you can watch this fair value gap right here. Risk on that is 18 handles for a stop loss on a closing below for an inversion. If it's going to be aggressive. I don't know what it's going to do here. It could be irrelevant, but that's kind of what I'd be looking at. Man, that execution sucked. I wish I pulled down my stop loss from 20 handles just a little bit more. Gave it room to breathe, so to speak, because I mean, when you get these big injections of volatility, you got to expect that the retracement could be 20 handles, and I just didn't move my stop loss in time. I would have moved it. What's up, Tony? So 1 loss, 1 win, if you don't count my 930 debacle. Click the wrong button on 930. That would have been a nice 20 handle move there. Oh no, I have 2 wins and 1 loss. I did take that rejection of this level right here. No, it wasn't. I took the rejection of, I think it was somewhere around here. There was a swing high that I took a short and got 10 handles on. So 1 loss. I'm allowing myself only 2 losses per session, and I usually only trade 1 session. So I have 1 loss accounted for, which honestly it shouldn't have been a loss. It really shouldn't have. I mean, if you take a look at my chart here, let me pull up the screen so you guys see my executions here. I went long on this 10 o'clock candle expecting us to run towards those highs that were sitting up here. And when it was running higher, I got long and it just retraced 20 handles in a flash. And I just didn't move my stop loss quick quick enough because I was pretty confident it was going to do that, and I should have just removed that stop loss completely or moved it lower and give myself more range. Because that's one of the reasons why I've moved down to 2 micros right now. 1, the volatility. 2, some uncertainty. But 3, when I go to a smaller size, I can afford a larger stop loss. So I'm okay now going for a 30 to 40 handle stop loss because I'm using small size. I mean, this trade here, these 2 trades together, that was 80, so 20, that was 40 handles. 40 handles. So I'm getting consistently 40 handles on some of these trades. So doing a 1-to-1 risk to reward, that's not bad. I just should have moved it. So that loss, I'm kind of a little, I'll journal about that. You know, I probably need to have a different preset for an entry so I can select that. I got a 20 point, 10 point, got my 930. I probably should add another one for my small size trades. Thanks, Ted. Appreciate it. Let's go back to the screen here. So honestly, price action is looking pretty good. It's done everything we wanted it to do. Just didn't manage my risk based on the volatility of that candle, especially it being 10 a.m. 10 a.m. Top of the hours on the hour typically have more volatility. And I just should have adjusted accordingly, but I didn't. All right, so how are we going to handle this? I'm not sure. I kind of don't want to go short right now. If we close, I think I want it to retest midnight and then sell off. So I don't think I'm going to take this entry right here. It's too unrealistic for it to go boom, boom. That doesn't look, I don't see price do that very often. So if it's going to do it now, it can do it without me. Or you do 1 micro contract. But I think I want to see it come back up into this first. Oh, you're going to do it, aren't you? It's going to go without it. Nope, you're going to see this mouse stay right here. You're going to see the mouse stay right here. Full disclosure. Oh, man. Look at that go. Oh, look at that. Even if you get out right now and it doesn't run, look, that's 34 handles. Yes, JB, I am. So I have it copied. Right now, I'm only copying it to 3 accounts right now. Guys, that sucks. Man, that was beautiful. So, lesson here. If I'm going to trade mechanically, this would have been an entry. This would have been a winner. I made a judgment call based on what I've seen and made it subjective as well. And there's times that you can be subjective in your decision making. If you're going to be subjective in that decision making, then you need to be okay with a potential missing out on a trade. So now the question is, do I want to take this one? And for me, the answer is no, especially since we grabbed the swing low. I'm not going to take that one. It would just be it'd be insane. It really would be just insane, and it probably would work, but I'm not going to take it. I can't. But what you can do is you can take the breaker. The risk on this is we have fair value gap here and here that it could reach up into. And that's a big, you're looking at 50 handles potentially. So let's see how it wants to react here. Yes. Apex Trade Copier and Ninja Trade Platform. That is correct, JB. With the amount of volatility we're seeing in these candles, it's so important to be on the right side. This was the right side, and we chose not to do it. Or I chose not to take it. So if I'm going to take a trade, I need to be clear and careful that I'm taking it to the right direction. And based on everything I'm seeing here, it needs to be to the downside. So I don't want to take a trade to the upside right now. I want to take it to the downside. And I'm going to watch this fair value gap. This is kind of where I want to see price reach into and then reject. It's the first inversion fair value gap. I want to see it reject this. I wouldn't be opposed to taking an entry right at 19,565. My stop loss would easily cover all of that. So I'm okay. I would be okay taking a short off of that if it wicks up into there. The other option is if we do get an inversion to the downside, I'll take that inversion because we're sitting at a breaker right now. Apex Trade Copier and Ninja. Do you use the Ninja, JB? I have, I don't think I've done a video on connecting the Trade Copier simply because it took me a little bit as well. Let's see what happens here. I have to wait for the close. I have to wait for the close. I'm not chasing this one. And then I'm going to take a standard position at, it will be 20 handles. It won't be this low because I want to make sure it may not close or it may not run all the way down there. What, 5/10 for 1 or 2 micros? I don't what does that mean? That looks nice for a push higher. Not going to take it. Good respect of this level. Based on order flow, this fair value gap is respecting it. We want to see if it wants to push higher into here. I mean, this looks good for a long. I'm not going to take it because I want to go short. In trade of 8. No, I don't. I'm hoping you'll do one soon. Yes, I'll see if I can figure that out. It sucks to do the 5/10 for 1 or 2 micros. I don't understand. I'm sorry. You have to use the number of accounts instead of just... Oh, yeah, okay. I understand. All right, 3 candles have respected this fair value gap. Good probability we'll see it push higher here. Again, not taking it. This is just me reading order flow. Just because I may be right or it looks probable doesn't mean I take it. Okay? So there it is. It did exactly what I wanted to see it do. I'm looking for it to come up here into the midpoint. I'm not just going to take the first stab at it and see if we can get a retracement of 20 handles or so. I want to see this inversion act as an inversion, meaning I want to see it come into here and not, and I want the bodies to respect this level. I'll be waiting for the close of these candles. Not gonna lie, that looked like a great spot to take a short right off of midnight. But I didn't take anything. Don't like that close of that candle. I mean, it's still inside this range, but I just don't like how the full body nature of it. Specifically is what I didn't like about it. I don't like taking trades at 10:30 anyway that much because they're manipulative candles, they typically are, unless it's in the middle of a setup. So another close here. I'm going to take an entry and see if we get 20 handles from this, or I might let this play out a little further. Let's see if we can get that displacement. Sorry, I'm in a trade right now. I want to see this close red here. I'm going to do the top of this fair value gap to give it space here. If I lose this trade, I will be done for the day. Why am I willing to take a short here? We have our London high, new day opening gap, 15-minute fair value gap, filling of the opening range gap, all of that there with a large displacement lower. I think we run lower. I just hope I don't get stopped out. I moved my stop loss. We are 25 handles is my stop loss right now. All right, I'm gonna give it just a hair above the bodies of the candle that made that fair value gap. Doesn't look like it's going to. Probably get stopped out here, folks. Yeah, I'm gonna get stopped out. All right, that's going to be it for me. I don't regret taking that. I'm okay with extending my stop loss. If anything, I probably could have extended my stop loss higher. We're looking at this fair value gap. Let's see here. Let's see the 3-minute. Yeah, I mean, you could have extended your stop loss to be at the swing high, and it would still be a realistic stop loss. Yeah, I got stopped out by, I moved my stop loss to this body, to the backside of this body. I could have done the midpoint of this wick, and that would have been actually a more appropriate stop. And there it goes. Disappointing. That's okay. We don't have any liquidity that this candle, this up closed has grabbed. So really, we don't have a good opportunity for a short. I think it would be wiser to wait to see what happens here. I mean, you could potentially take that inversion, but we didn't even grab liquidity there. I don't like anything here. I really don't. I think it's wise to stay out. Wise to not do anything. Yes, never hit the London high. I guess that's a thing that I didn't pay attention to. Yeah, there's London high right there. And it's right by the equilibrium of the previous day range. Yeah, that makes sense. Let's see if we get a sell-off after we hit that. Let's look at the 15-minute and 30-minute. 30-minute, let's check out that. What do we got? We're probably going to get another expansion candle here on the 30-minute. What about the 60-minute? 60-minute doesn't look any different. We did come up into the hourly. Yeah, I really like us kind of stalling out up here. I do like that. But at the same time, we hit a weekly low, a major level down here. So we could potentially see an expansion, I guess. I might have my bias wrong. We do have our equilibrium of the entire range sitting right here. I did mark that out. Inversion that I would not take. We didn't grab liquidity, so it's not a valid trade for me. Yeah, I don't regret taking the breaker here. I'm glad I didn't take this breaker. We had too many fair value gaps here. I don't regret taking this chance here. I think that was a legitimate idea, especially based off of 9:30, or especially based off of midnight open. What's up, Blessed? How you doing? All right, so ES just grabbed buy side liquidity and tagged. Here, let me open it here. All right, so here's what it did. This was our London high. London high, I should mark that out. And then we have our daily. Make sure I'm doing this. And we swept the previous day. So this is what I want. Here's the 15-minute on ES. Yeah, we might just keep pumping here. The way this looks for something like that. Goes in line with our higher time frame bias that we continue to see some price action to the upside. But it's just messy. It's not as clean. We had a BPR failed inversion to the downside, so price actions respecting up price movement. There's our fair value gap there. That price. I said I didn't want to go short here because of this swing low. We swept that and closed red. That's pretty aggressive. No fair value gap here. The only opportunity you could have is this right here. And I'm not a super fan of it because of that swing low at the 1031 candle. But there is some nice liquidity down here. I'm going to leave my screen share screen up here so you guys can just see that nothing's happening on here. Interesting. Check out this 5-minute, folks. Check out this 5-minute. This is me post-analysis on my trade. We have this giant green candle to the upside, and we never close below. I mean, barely. Barely close below, potentially making this an order block. But that's not really convincing. If anything, we should have waited for a convincing close below this and then looked at that. So while I don't regret taking the trade, the idea wasn't completely validated based on the 5-minute time frame is what I'm trying to say. We were still in bullish price action in a bullish environment based on what I'm seeing here. This sweep of liquidity right here and this rolling over here looks more favorable. I like the idea of going short right there. That would be your entry. I'm not taking it. You guys can see my screen. We're just going to tape read this out. This trade is violated if we close above this red line. legitimate setup. We sweep higher. Oh, we sweep liquidity up here. We have a very doji candle. We have displacement lower. We have a change in state of delivery on the 1 minute, not on the 5 minute. These are probably, I mean, it's not an A+ setup, but for those that wanted to take the risk, I think the risk is worth taking. Tapped a breaker right here. You see that, Ted, right on that green candle low? Nice little breaker. No worries. Caps are fine. Trade is invalid on the close. So technically this trade is still live. On a close like that, that's subjective. I probably would hold it. And if it goes green, I would be closing it. So I probably would close it here. Yeah. Because when you get that retracement like this, and then it closes, sometimes it's not perfect, doesn't get inside the fair value gap, but it wants to displace lower. It was just reaching for it, and it's a little messy. It closes above it, and then it kind of starts running the other direction. That can happen from time to time. So that's why watching how the candle's coming back to that inversion fair value gap is important to keep an eye on. So you saw that we pushed higher, and then at the last second we retraced down to here. Now it didn't close below it, a little messy, but you can see that this candle is moving lower. So let's just see what happens. Let's see if it turns around and runs against us. If it was good that we stopped out and we closed the trade, well, it closed green. This would be a big sign of saying I wouldn't want to mess around with this. So to me, again, I wasn't taking anything. I'm not taking anything. You can see all my execution chart. This tells me that price is just in between, and either we've already hit our upper target and we're just messing around and we don't have a lower target. To me, this is our lower target. I want to see price come down to here. I would like to see price come down to there. I'm not sure we're going to do that, quite frankly. I don't think we're probably going to do that. I think we'll probably save that for later. It just doesn't make sense for it to go all the way down there. So there's no real lower time frame target. I don't have really a higher time frame target because everything has been hit in here. So our only option is to jump up into a higher time frame and look and see what else do we have. So we have displacement to the upside on an hourly basis. We have an hourly fair value gap sitting right here. Price is going to close in 17 minutes for that. It filled that hourly BISI. I think Ted said it left one handle or one tick or something like that. If we were going to then, because we filled this and respected it, it depends, does this candle close inside this range or does it close above this previous candles. If it closes inside the range, I would be looking for price to come into this hourly fair value gap that's sitting right here, depending on how this candle closes in the next 17 minutes. See how we're just back and forth? Why is it stopping here? Did we get up into that rejection block? Okay, barely. We got up into this wick, but still. It's just, as you can tell, it's becoming more sloppy. This is the kind of stuff I don't want to trade. This is the only trade opportunity I think is legit. This fair value gap right here. That inversion to the downside. I wouldn't be doing anything else. Kind of just consolidating here, folks. Kind of just sitting here waiting. Seeing if the market wants to do anything. Bannock, it is now rejecting all my orders on TradingView. I probably blew that one, though it shows I only have $2,000 in drawdown. Yeah, if it's rejecting, it's because it was blown. Nice job. Nice job. See, I need to take these I'm having issues with my my CPU getting too hot. I installed a temperature reader and everything's hitting like 212 degrees. So I just took off the front of my desktop so it would cool off. Here's my there it is. Oh, you can't see it here. All those red is 100 degrees Celsius. It's like they don't recommend you get above that. You want to stay lower. And every time I live stream, when my computer freezes, I identify that it's because my computer's overheating. So I put in a new fan, and even with the new fan, I don't know what's going on. So I need to figure out something to keep the temperature lower because it's been struggling. When I take off the front glass, I have a glass cover so I can see all the pretty lights and stuff. But when I have that on, it just keeps all the heat in there, and the fans aren't strong enough or something. We're just chatting here because there's nothing else going on, folks. TOC, have a blessed day, man. There's nothing really pretty going on in that right there. So today, for me personally, I'm going to do my best to accept the red day that I have without trying to turn it into a green day. So that last trade took me red. It's my second loss. After 2 losses, I need to stop. So had 2 wins, had 2 losses. And the red doesn't hurt. I mean, it's because it's a small amount. But what hurts is in the past, when I'm red and I want to turn it green, I will do more trading. And then the loss gets bigger. And then bigger and bigger. So I'm going to accept the small red day that I got. And I'm going to move on. I don't want to make it bigger than it needs to be. This is a lesson I know I have to become more accepting of. Is that red days happen. And not let a red day turn into a big red day. Everybody knows red days happens, but what usually happens with traders is we let that red day get out of control, and then it's really red. The problem is that you think that because it's not that red, oh, I could make it green. So you take another trade, or you're impatient. Now, if during the lunch session, the noon session, or the PM session, a legitimate trade comes up, I'm not opposed to trading that. But the problem is that many times we don't have the patience. We just want to get green and be done. Or we want to get green and then it's like we thought we were going to be done, but now I'm green and ooh, this looks good too. I can do no wrong, and you take another loss. So if a legitimate trade idea with a clear higher time frame draw and liquidity presents itself, well then I'm not opposed to taking a trade. But that hasn't been my issue. My issue has been I take subpar setups with no clear higher time frame target. I've turned into a pattern trader and disregard all my higher time frame analysis because I just don't want to stay red. I want to turn green, right? That's the mistake we make, and you can't make that. So as much as it is appealing to turn your red chart or your red P&L to a green P&L, I think there's more value, and I'm telling myself this right now, I think there's more value in accepting that red day, accepting that loss and walking away. And that's tough, Diane, because everything inside any person that wants to achieve something is we want to, I got to get out of it. I got to do something about it. And quite frankly, the best thing that we can do is walk away. And it's the hardest thing to do. Man, I don't know if it's going to get any easier. Because every single time you have to have a subjective answer of, is it time to stop? Is it time to stop? Do I stop now? Do I keep going? Yeah, I had my 2 losses, but they're not that big. It's the hardest. It is the number one reason traders don't see profitability. So if that is the case, how much more should we emphasize our ability to walk away? I put some of my old journal entries into ChatGPT as I was in the process of creating this video that I'm going to be coming out with tomorrow. And one of the prompts that I asked ChatGPT to give me was, give me some exercises to work on the recommendations you've given. These exercises are not fun, but the value of it I can see. For example, an exercise they gave was sitting in front of the charts, reading price action without taking a trade. How many of us want to do that? How many of us want to have, let's just say you got a fresh performance account with Apex, and man, it's looking great. How many of us want to not open that, keep it closed, not take any trades, and just watch price action and read it and call it out without taking a trade? Oh boy. Yet, what are we exercising? We're exercising our will, telling our body what to do. We know what we should do, but I feel like doing this instead. So we do what we feel, what we want. All right, so it's about 11 o'clock. We could see price pump right here. Let's see what happens. Still inside the hourly. Let's see if it closes above that hourly here in the next 2 minutes. we also, let's see if it closes above this 15 in the next 2 minutes. Those are the two things we're watching. How do we close these two fair value gaps? Bannock, you can take your video audio into Otter AI or ChatGPT and have it create blog posts to do list and questions that will help traders. Oh, to create lists and traders? Yeah. So I do something like that, but sometimes what I'll do is I'll download the transcripts from YouTube videos, and then I'll use that to start putting stuff together for me. But everything that I put together is my own content. I just use AI to help speed the creation of that content. All right, so we got 42 seconds. Let's see what happens here. Oh, it's super helpful. Super helpful. It also makes it really easy for wannabe influencers to not really put anything and make fake content and not really have true experience. All right, so we closed above the hourly, but not the 15-minute. To me, this is a manipulation candle. If we closed above the hourly, there's a good chance we see higher prices, but when, I don't know. But especially at the top of an hour, the direction it goes, to me, that could be manipulation. Yeah, no. My transcripts are mine, 100%. What I'm saying is people will... all right, so here's an idea. Here's something that I do. So when I'm looking for a YouTube idea or a video idea, I'll go to other videos that I like. I'll take the transcripts of it, and then I'll get an outline of that video. Now, there's a fine line from stopping at that point and then somebody just taking that content completely and just making a video based on that content, or doing a blog post based on somebody else's video. To me, there's some ethical issues there. Yeah, it's completely fine because it's not the same, but any blog post you see me do, any video that I've created, it all comes from my own personal experience or content that I've personally dealt with. You just don't know. It's so hard as a consumer to know, did this person really do this, or is he just, as you get more into the space of a content creator, you understand the resources that are out there for content creators. And it's just like, man, I could totally see somebody that doesn't know how to trade could pose as a profitable trader. Now, they couldn't do it. They totally could not do it if they're live streaming every day like I am. Like, live streaming really is, to me, the clear indicator for somebody to find out if they can actually trade or not. It's the traders that don't do the live streams. They don't do any live things. Everything's pre-recorded. Everything is just, post, or it's post review of stuff. It's the live streaming content that I think makes a trader stand out amongst the competition of content creators. Because you can't hide call-in price action live. You can't hide it. All right, so we have a complete nothing burger so far. I like this dropping right here. Look at all this low resistance liquidity. This looks really, really nice to be ran. Again, this is the level that I'd be watching. You could see this and then that, right? So trying to take this short right here could result in a loss because it could just bounce back higher anywhere inside this range. It's when you close below this fair value gap right here that there's a good probability we run for that low. That's why taking trades in this is not a good idea. It's just going to rely, or it's gonna be, what it does is it creates uncertainty in your mind because there's no clear setup, so you have no conviction. So then you short circuit your trade and get yourself out when you're down 5-10 handles, and then those losses add up on themselves, and you end up collecting a larger drawdown. Maybe you're down, $100 or $200. Well, now you're down $500-$600 because you've taken 4 small trades in this price action that have all resulted in a few small losses. It's this price action that gets most people. It's this price action that the smart money traders are grabbing people's orders, and they're just sitting here holding them, letting the price go up and down, waiting for price to then leave these areas. FX replay has been really helpful for back testing. It makes it very fast. I wonder, Bannock, if they updated something, because when I was using them, I'm messing around with settings and trying to get things to work properly, that I'm like, forget this. I can't mess with this anymore. I can't do this anymore. So I literally just do it on TradingView. On TradingView. It's super simple. I mean, guys, we're sitting here waiting, so I'm going to show you guys this. I did a video on this, but this is the best. This is a hack. This is a TradingView hack to get as much data as you want. Okay? So if you open a new page, let me get, I have one called backtesting. Backtest. All right, so if I open this page, I have all the price action right here, right? Watch what happen. If I go to if I want 1 minute price action here, right? This is all I get for 1 minute price action. If I go back in time, this is as far as it will go for 1 minute price action. This is it. That's it right here. It went back to March 9th. That's as far back as I can go. But watch this. If I go to the daily time frame, obviously I can go way further than March 9th. Right? So let's go back. Let's look at, I'm just going to do a back test. I'm going to hit replay, and I'm going to go to October 31st. If I go to October 31st from the daily chart, we know that the 1 minute time frame did not show up. But now if I go back to the 1 minute time frame or the 5 minute time frame here, I can at least get a 5 minute time frame on this data from October. And I can go back all the way over here. Now, October might be a little far for historical data on the 1 minute time frame, but I can go back significantly further on the 5 minute at least. Let's look at the 2 minute. I can even go down to the 2 minute. I'm all the way back on October 30th, and I can back test this. I can start my forward testing from this point on. But if I go back to, if I exit out of this, and I go back down to the 2 minute, which we're at right now, look how far back I can go on just the 2 minute. Now, remember that when I was doing this before, we were back on October 30th. If I stay on the 2 minute time frame, it will only let me go to February 16th. So the hack is, go to a higher time frame, go back further in your replay, and then drop down to lower time frames there. So I'm on the daily time frame. I'm going to hit replay. Let's go back to January. Let's go back to January 1st. Here's January 1st. And if I go back to January 1st, well, I just dropped down to the 1 minute time frame. I'm on January 1st on the 1 minute time frame on TradingView. So it saves, you don't have to pay for some other FX replay if you don't want to. You can do everything on TradingView. And I was just having issues with FX replay, and it just not loading, taking forever to load, blah blah blah. So I elected just to do it all on here. And look at that, folks. We absolutely missed nothing. Nothing happened. Yeah, I thought they used TradingView as their charting platform. LJ, hey Tyler and everyone, good morning. I haven't been trading, unable to buy an account. LJ, as in you don't have the money for an account, or they're just blocking you for the account? I totally understand budgeting aspects of it. But it doesn't keep you from trading on a demo account if you're really committed to learning the process, because while you're saving up for, let's say, an eval account, you could be back testing every single day, like we've just been talking about, your model and pattern, and exercising your ability to walk away from a trade after you have a loss. And there's so many things that you can exercise as far as building your trading muscles. And then when you got the funds for an eval account, that's when you pull the trigger and you treat it like it's your baby, following your rules and everything. I just like the custom daily open that makes it fast. Oh yeah, totally. JB, you like this view better? You can see the charts a little bit better. Let me see what happens if I... All right, Ted. Have a blessed day, man. Let's see, do I have the share screen on here? Can I put it behind? I think I like that. Let me see if I put it behind here. JB, I can do more of this screen. That's fine. If it's helpful. I'm just deciding where do I want that extra screen if I'm doing executions. I can leave it here. I mean, there's a few options. I could leave it behind my image, I could put it up here. I could have just a portion of it, like right there, to be just to see the active position and do all my... I think I like this right here. What do you guys think of that? Do you guys like the... As far as the execution chart, we don't need to see the whole thing. We just need to see kind of the levels that I'm at, because all my analysis is going to be over here. I think I like that. I might try that out. Oh, where would the P&L? P&L would be right here. Is that on the screen? No, just off the screen. So let me... That should give me a... Yeah, so P&L would be able to be right there. All right, so that's on there. Wonder if I can get it... No, I really can't do anything more than that. Yeah, I think that might work. It still gives me plenty of space here to work. Let's see, it would be all the way to here. Yeah. I don't, yeah, the P&L, okay, so Bannock, I don't keep track of my P&L as much. It shows up there because I can't hide it. If I had the option to hide it from my own eyes, I would. Because it affects you. No, remember what I said? I said this looks really good for us running that liquidity, remember? 1, 2, 3, 4, 5, 6, 7 swing lows. So this could run. The problem is, because there's no fair value gaps in here, it could just drop all the way down here and run all the way here. Or it literally could turn at any of these swing lows and turn around and start running the other direction if price really is wanting to move higher. So it's working. We have a breaker right here. So that would be your only entry opportunity, in my opinion, if you're going to try to take this to the downside. The 5 minute, we have a displacement. We have a change in state of delivery. I mean, that looks good. I like the way that looks. I like this breaker here as well as an entry point, because that also is inside this 1 minute fair value gap. Look what it overlaps. So look at that. So breaker low is here. Even if we did the body, it would make it look even better. So breaker overlaps with the midpoint of this fair value gap, and we have the new day opening gap overlapping there as well. So seeing something like this coming back up into here, to me, would be my entry. If I'm thinking, which it does look good, that all of this low resistance liquidity is going to be ran. Now, we also could just miss it. You could potentially miss it as well. We'll do a demo trade here. There's the wick. Did you guys see that wick? So it already hit it. I'm going to go ahead and assume I'm going to take that entry. This is a demo trade. So assuming I got in here, stop loss would be up here. The risk is that we could reach all the way back up to this one. Do you see this breaker right here? If we break through this one, the next area of interest would be this breaker right here. And that's right where my stop is. So is my stop in a good spot? No. Quite frankly, the position is a horrible position. you would want to be here and not have to worry about your stop loss there. Let's add to that and let's see what happens. Guys, this is the paper trade. I'm done. There's so much. Like I said that it could run one of these levels here and it could literally turn the other direction. That's the main reason. But we got a breaker right here, a breaker right here. I can see the reason for it to go lower. We have a bunch of resistance here. So I like the idea, but when there's no clear draw on liquidity, this is the kind of price action you get. You have to have really wide stop losses, and say, all right, well, I'm going to put my stop loss above the high and I'm going to put my target, down here, and let's see if it plays out. You have just much larger stop losses because it literally could go either direction. We have the structure. We have reason for it to not go higher. But I really don't have a lower time frame draw on liquidity. That's clear for me. That's what makes these type of trades difficult. And the longer I'm in trading, the less likely I am to take, the less I want to take those trades. There's the body of this breaker. And see how it's just pushing right through? It's a loser trade. Just not. Yeah, so Sonny, I trade ICT. The higher time frame narrative definitely is higher. We're just inside of the 15-minute, hourly, the daily, the new day opening gap, midnight open, London high, all around here. And yeah, it's definitely to the upside. So plain continuations are more in your favor. It's trades like this that just remind me not to trade in the middle of a session. It's setups like that. It looks good. We have a clear breaker. We have a higher time frame resistance. We've filled these areas. But this is the reason why it's hard to do those. Look at this candle here. This is the weekly candle. We swept this low. That's a big deal. We could potentially run all the way up to this swing high right there over the course of the next couple weeks is what I'm trying to say. We had 4 weeks in a row of sell-offs, a nothing week, and another sell-off week. There's an opportunity for us to retrace back this way on a higher time frame. So when you look at the lower time frame, we know, in my mind, I know that the higher time frame direction is going to be bullish. It doesn't mean we can't take bearish trades, but this is the kind of risk you have when you know the higher time frame is bullish. You get your breakers and in the areas that should show resistance, they just get blown right through at times. Definitely difficult. So it's almost better to take your longs. And if I had to, going back on my analysis, I wanted a short. Here I was saying I don't want to take a long. And it made sense in my mind. London high, new day opening gap, opening range gap, hourly, 15-minute, all being respected. Look at this break. Man, looks fantastic. The higher time frame narrative is saying bullish on a weekly time frame. So your risk at taking these types of trades to the downside or taking this breaker or from this inversion like I did is it being blown through like this. It takes a lot of awareness and self-discipline to say, you know what? This trade looks amazing, but I'm not going to take it because the higher time frame, the weekly candle is suggesting higher prices. And being okay even if it works out. That's the hard part. Okay, cool. I'm about to dive deep into myself. Come from trading supply and demand. God bless. God is the provider. Do not be anxious for anything. I have to use this so I can be patient in trading. Yes, so I'm one of my next blog posts is going to be about patience, Sonny, and it's going to be how you have patience in Christ already, and it's your choice to use it because it's yours. As a believer, we are new creations in Christ, and it was given to us. So, wish you the best of luck, my friend. You'll get there. Just keep staying disciplined, save your money. Let's see what happens now that we hit this again. I mean, I don't know. I have no idea what. I think it would just go right through it. Yeah, the reason why it might be blowing, we'll call this resistance, not support. I would say it's resistance. It's keeping it from moving higher, theoretically. That's why understanding your higher time frame structure is so important. You know the other thing that I haven't done, and I'm just realizing this? I haven't marked out our monthly opening price. So let's do that. Here's our monthly candles. There's the equilibrium of the previous month. And there's our monthly opening price. Now that we got some of these levels, let's drop down to the weekly and see what it looks like. Is that monthly on the right level? Yeah, it is. So I have marked the high and the low, and this is the midpoint of that. So when I'm journaling here today, JB, that's kind of what I'm going to be talking about. Is I'm going to be talking, or I'm going to be journaling from the perspective of identifying that higher time frame, like the weekly levels, and really getting a clear idea that we should see bullish price action, and really being careful on trying to play those rejection levels, or those being very careful on not trading patterns that show up, but trading the higher time frame chart and finding price action to support that move higher. That's really what I'm going to be talking about. So, like I said, folks, I am done trading my accounts. So we're going to go ahead and log off here. I'm going to be done for the day. I'm marking a loss on today. I think we're down 50, let's see how much. $73.76. That's what I'm down for today. So we're going to let that be the loss. I'm going to journal now that I'm getting off. And then I will be back here tomorrow morning, 9:15 New York Standard Time. We'll be back rocking and rolling. So stay safe. Good trading, guys. God bless. And we'll see you guys tomorrow. We'll talk to you soon. Bye-bye.